Jane Foley honed her skills as a currency analyst at Barclays Capital and Forex.com. She's now senior foreign exchange strategist at Rabobank. She joins me from the bank's London offices. Jane, thanks so much for speaking to us. Good to see you. So, of course, it goes without saying that the Yuan exchange rate going to figure prominently in these talks in Washington. What do you expect to transpire on this issue?
Well, to be honest, I would say more of the same. In fact, this sort of conversation is a very deja vu element to it. Now, we know that China tends to call the pace itself. It won't be pressured into doing something it doesn't want to do. But I think one of the interesting parts of this whole debate is that it's not a very straightforward dynamic. We've got to remember that it's not the US, but the EU that is China's biggest export partner. And of course, if you go back to the beginning of the year, what we've seen this year is a trend higher in the euro. So as long as the euro appreciates, and China can plough more exports into the eurozone, and in a way you can say that makes it a bit more easier to allow the renminbi to appreciate against the US dollar. So, as I say, this is a complicated dynamic here. It's not as straightforward as many people think. It's not all about the dollar at all. So we will have this continuation, I think, of a slow appreciation of the renminbi. Inflation, I think, really is the key word for the rest of the year. Many people out there are saying, well, if they are so worried about inflation, why don't they allow that exchange rate to appreciate a little bit faster? Trade data, of course, overnight was very interesting. We had a very strong Chinese trade data, and the interesting part about this month's trade release was it was exports, of course, that were really strong, and imports didn't grow by as much at all. So from that point of view, it seems that the tightening that you've seen in China may be having some effect, but certainly those global imbalances are topical.
And so, Jane, just to pick up on that point with the trade surplus, and you mentioned those figures, does this mean more pressure from the US for China to allow a stronger currency?
Absolutely, yes. When I think a month or so ago, when probably the preparations were taking place for these discussions, it looked as if China had a little bit of a card up its sleeve, because it could say, well, look, it seems as if our imbalances are correcting. We've now got a trade deficit, but then we get those figures overnight, which suggest actually that exchange rate is still causing an enormous amount of global imbalances. So it does give the US more reason to keep that pressure on China.
Okay, so to what extent will adjustment in the currency ease global economic imbalances and also ease domestic inflationary pressures in China? How important is this issue in those two sort of obstacles or dynamics, if you like?
It's a contributing factor, without doubt, but of course it's not the only element in the debate. I mean, the other thing to bear in mind is that you cannot have a fast moving exchange rate. That generally causes its own set of destabilization factors, which could cause other problems. So nobody really wants to see a huge amount of volatility. That won't happen anyway, because this is a managed exchange rate. But certainly this will continue to be a slowly moving exchange rate theme, and it will continue within China.
Just a quick one on this, Jane. You talk about the volatility, and of course Chinese policymakers have always argued for a gradual increase. But does this latest trade surplus data perhaps suggest that the economy can handle a quicker appreciation of the yuan?
You can certainly pose an argument to say that that is the case, but then, quicker, it doesn't necessarily mean to say rapid. I mean, what we've seen this year to date is something like 2.7% appreciation over the last year, maybe something close to 5%. So many people would say that's still very moderate. So yes, potentially you could see a quicker pace, but not necessarily volatile or rapid.